Today, we will talk about the global regime of capital accumulation that we actually ended last talk introducing, although very, very briefly. Globality, as defined by Manuel Castells, it says, the informational economy is global. A global economy is a historically new reality, distinct from a world economy. A world economy, that is an economy in which capital accumulation proceeds throughout the world, has existed in the West at least since the 16th century. I mean, we talk about that, about the discovery of America and the expansion of the beginning of the 16th century. But, says Castells, a global economy is something different. It is an economy with the capacity to operate as a single unit in real time on a planetary scale. It is this simultaneity, this shrinking of space and time that is actually making this a completely new, not only regime of accumulation, regime of economic accumulation, but also a different way of life, and we can even talk about a new civilizational stage. According to David Harvey, we are living in yet another space-time compression. According to Harvey, the history of capitalism is marked by a series of time-space compressions in which, due to technological advancements and due also to the needs of capital to make the rate of return to move faster, the distances to move commodities and money, from one place to another have to be reduced. I mean, if you can reduce the time you move a commodity from 1 week to 2 days, obviously you are making your money to produce faster, your capital to produce faster. And there is the principle behind this constant, permanent, historical time-space compressions that have been occurring since the 15th century. Now, what is happening now is that, according to Harvey, an omnivorous colonization of space and reification of time subsumes the more intimate feelings and experiences of time, space, and everyday life to the cumulative and expansive logic of capital. Nowadays, there is a matching in the production of value and the production of enjoyment, and the extraction of surplus value and the extraction of surplus of enjoyment, the exploitation of labor and the exploitation of desire. I'm going to explain this in a minute. But it has to do basically with one issue. Nowadays, we are always producing for capital either as workers or as consumers. When we are consuming, we are also putting our desires to work to produce enjoyment, but the enjoyment has to be paid. And when we pay for that, we are moving the economy. How it all began? Began with the crisis of Fordism in the late 1960s and early 70s, and the advent of globalization. In the 1960s, there was a decline in the corporate profits due to a combination of factors, among which the high salaries and social welfare costs, which make the cost of production for capitalists too high. There was increasing competition from Europe, Japan, and the Asian tigers. Remember, the expansion of Japan and all the technological taking over of Japanese industries. The Japanese, and then the Asian tigers, the Korean car industries, and so on and so forth. There were also the oil rising costs, particularly due to the founding an organization of the OPEP. And there was also a saturation of markets. Saturation of markets with commodities that the people wouldn't buy, and a decrease in consumer demand. All these combining factors led to a decline in the profits of corporations. This obliged companies to enter into to take measures to transform themselves according to the new times and the new needs in order to make more money. So there was a shift from industrial production to financial speculation. Because, of course, to make a car was not as profitable as to invest money, in the financial system. So, because there was an accumulation of uninvested capital. There was a lot of money, like it's happening today. There was a lot of uninvested capital that actually was put to work better and faster and in the financial system. There was a surplus of petrodollars, all the dollars that actually the oil-producing countries were making. They actually were investing them in the U.S. economy. So there was this excessive surplus of petrodollars. The banking system didn't know what to do with so much money, and that's the origin of the foreign debt of the third world countries, Latin American countries. And there was also idle industrial capacity. Most of the corporations, most of them, we know that in Ohio very well because of the Rust Belt precisely is a living proof of what happened during this period. All this industrial capacity became idle because it was too costly to produce the same products, and there was somebody else who was producing them in a cheaper way, so there were no buyers for those products. So that led to the abandonment of the Bretton Woods fixed exchange rate, and the Bretton Woods Accords that had maintained over 30 years after the Second World War, had maintained a stable international system. So the dollar, who was the value of the dollar, who was pegged to a certain amount of gold, was left to flotate in relation to other currencies, and this led to the dismantling of the welfare institutions. As I said before, labor was too costly, too expensive, and so in one way or another, those costs had to be reduced, and that was done through the reduction of salaries and to the elimination of welfare benefits. So this led to a whole corporate reconversion. And there you can see more or less some of the main points that involve this reconversion of the industrialization to what was becoming to be a new mode of development. Corporations had to adapt from the old system of economies of scale to economies of scope. Instead of producing the same products in thousands of numbers, they will produce a reduced number, but also more targeted to a specific buyers. From serial to customized production, from stock to just-in-time production, and this is also known as Toyotism, because actually the system was implemented the first time in the Toyota plants. And from the Taylorism of the Taylor system, that was implemented originally by Henry Ford in its plants in Dearborn, to outsourcing and subcontracting, which is very crucial in all this. When a product can be, with a piece of product, whatever, can be done in a cheaper way and in another place, capitalists don't hesitate to close a plant and to order those parts or products or whatever, done in any other part of the world. So we all know about that, what is outsourcing and subcontracting. So the corporations move from vertical management to networking, from manufacturers to services and information, because actually manufacturers were not producing the same rate of profit, offering the same rate of profits to the investors as services and information industries. This is the huge, shows the huge development of all the internet and all that is related to the new digital technologies. Then there is also a shift from the production of material goods to the design and distribution of symbolic goods. Today, companies don't make money actually producing objects or goods, but actually designing, distributing, and keeping the brand of the product. That is where really the money is done. So you have a pair of Nikes, for instance, but the pair of Nikes, actually, the manufacturing of the pair of Nikes is done in Philippines, very, very, very cheaply, and the same people who are doing the real Nikes are also, manufacturing the pirated Nikes that will be sold at a different price, much lower price in other countries. But what really matters, what really counts for the profit that the pair of Nikes produces is the brand the branding, and the design and the distribution, which is actually controlled by the main corporation. So there is also a decentralization of production, and control of design and distribution is very clear about. It has to do with the previous point, and also this is an important issue. It goes from mass consumption to style consumption. Everything nowadays, it has to do with the style, individual style. Of course, this is the same mass production as before, but of modern times. The 1940s and 1950s, but still what counts is the stylish way that a product is done. So this is a new regime of capitalist accumulation, whose productivity shifts from the industrial production of material goods to the cultural consumption of symbolic goods. And this means that actually where the real money is done is not in the actual manufacturing of goods, of material goods, being cars or shirts or whatever, but in the cultural consumption of symbolic goods. What we are paying for is not exactly a computer, but the brand that comes with the computer. The computer can be done very cheaply anywhere, in many places, but what it counts is the brand that computer and the technology that is inside that computer. Whose productivity shifts, whose agents and spheres shift from national economies and international trade to global circuits and transnational corporations. And this also has to do and is related to the shift from modern migration, of modern immigrations, to transnational migration, and upon new means of production, new information technology, the control of the means of circulation and distribution, the control of information and knowledge, and the monopoly of patents. So you can check where the companies who make more money, and how do they make money, and the richest people in the world, how do they make their money? I mean, you will find that they always have the monopoly of certain patents. They control patents, information, and knowledge, and they control the circulation and distribution of products, not necessarily the actual manufacturing of the products. That's why the manufacturing of the products can be sent anywhere, can be done by anybody, anywhere. But the control of those, of the what we can call the cultural capital, is maintained very tightly centralized by major corporations. So, this is a dual regime of flexible and combined accumulation based upon the exploitation of labor, both manual and intellectual, through a more intensive extraction of absolute and relative surplus value, and the exploitation of desires, the desires of consumers, of course, through the unstoppable creation, segmentation, and absorption of new consumer markets and new consumers to the market. So we are actually being exploited, if you want to put it away, both as workers through the production we extracted from our labor, but also as consumers from the production that is extracted from our desires. So, neoliberalism is something that has been very, very important in Latin America, because in the 1980s was widespread in all countries, and it had a huge impact in the transformation and actually many of the problems, economic and social and political problems in the region. According to Roland Robertson, and I read, global restructuring, the Washington Consensus, or what has come to be known as neoliberalism, is a doctrine of laissez-faire capitalism legitimated by the assumptions of neoclassical economics, a modernization theory, by the doctrine of comparative advantage, and by the globalist rhetoric of free trade, growth, efficiency, and prosperity. In the States, almost nobody talks about neoliberalism, but actually uses the term neoliberalism. But actually, the system we are living in since the 1970s or 1970s, 1980s. Neoliberalism can be considered, and is considered by many, an ideology. I mean, not only an economic system, but an ideology, in fact. Because it's characterized by an individualistic, utilitarian, and ahistorical vision of economy and society that begins with the premise that freedom of choice and the rational calculation of producing and consumers is the underlying principle of human behavior. Of course, this is the doxa in the U.S., and to see this as an ideology for many could be difficult, but it's actually that goes in even against the principles of Adam and Smith. It postulates the need to eliminate interferences that limit the supposed free play of the market, most than anything else, any form of state intervention. Capitalism is assumed to be the best possible regime because it supposedly operates free of exploitation. So, the Washington Consensus, which is an important component in this process, is actually a gentleman's agreement, we can say, that came to be somewhat formalized during the 1970s and between the 1970s and 1980s, identified 10 goals for the political economy reforms that every government ought to make, not only in Latin America. I mean, it was implemented in Latin America overtly and with terrible consequences. But also, I mean, we can see that this is actually what is practiced in the U.S. economy. Fiscal discipline, public spending cuts, tax reform, financial liberalization, competitive exchange rates, trade liberalization, foreign direct investment, privatization of state enterprises, deregulation and protection of private property rights. The imposition of the consensus involved mostly deregulation of the economy and privatization of state companies, control of salaries and reduction of welfare benefits, opening up of the economy to transnational corporations, and liberalization of the flows of commodities and capital. But this is very important, not of labor or people. And, of course, above everything else, the commanding role of finance capital.